Webinar, responsibility, combining money and purpose. All right. So as usual, I'm going to give just a few minutes for everyone to come on into the webinar. Again, as I said, my name is Skye Logan, your usual host for this week's fabulous webinar. Do not have my special guests speaking, so you're going to have to deal with me for this day. So again, we're discussing responsibility in investing, how to use your money, how to leverage it, how do you want to do that, what is your responsibility as an individual, what is your purpose as an individual to utilize that money, what can you do with that in society. So I definitely would like to have some back and forth on it, your experience on it. So a couple of house points. There obviously is the chat window. Feel free to chime into the chat there. I would like to know where everyone is from and any questions you have during the webinar. I am going to stick it here so I do not miss it. And there we go. Perfect. Put this here. All right, I'll give just another few moments for any late stragglers to pop in, etc. Feel free to chime in there in the chat window where you're from. I can say hello out to everyone wherever within the states, outside the states. Any of our usual viewers, how many times you've been on the webinars, feel free to say hello. And I'll either message you directly here or give you a shout out. I like doing shout outs. All right. Can't tell if it's fully in yet or not. So again, we'll get underway here. My name is Skye Logan, your usual host here at Equity and Help. I'm the Director of Philanthroinvestor Investing. My job is to help everyone through the due diligence period all the way through the initial onboarding here at Equity and Help. If you've been here with me in usual regular time, 10 a.m. Thursday mornings, I do a usual webinar. This week's webinar, responsibility, combining money and purpose. All right, so let's go ahead and just dive into this here. All right, so this is obviously a topic in a lot of my presentations, my discussions with individuals that they're investors. Most of our clients have a third of them experience in the equities, stocks, speculative investments, another third in real estate, or been a landlord or held some kind of investment in real estate. But they reach out to us because one, obviously they like the turnkey aspect of the company. One, we obviously know what we're doing very well, but they want to help more. They're a little bit later on in age. Our average, probably our median age for our investors, maybe 55, 60, but a little bit later on age, we start evaluating, what has my impact been in society? What has my money been doing? What have I been doing with it? One, whether it's growing good or not, it's just a separate subject to that, especially if their money has not been growing for them. It's been in a managed 401k or any type of managed IRA, and they finally dive into it and realize, oh my gosh, this hasn't not been growing much higher than just deflate, in inflation, right? Which is horrible to find out, 15, 20 years later. But on top of that, they had no idea what it was being used for, okay? And quite often, especially if they're involved with the speculative investment, I love this slide here. This says, break the cycle of emotional investing. I'm interested in if any of you have experienced this. You dive into it. I have seen people, even this week, if you've kept track of stocks, whether it's Tesla, whether it's GameStop, whether it's this, whether it's that, or whatever, you start into it and you're just like this excitement, right? This emotion that happens with it. And like, I'm going all in, I like this first guy here, right? Yeah, I'm doing it. And get the excitement about it. And this wave, this sine wave that kind of happens with these in the speculative world, right? This euphoria, the stock's going up. Like, oh my gosh, they showed me their phones. They're like, Skye, have you seen the blah, blah stock? Whatever it is. and they're like super excited, like, oh my gosh, I'm going to make a killing, man. I'm going to go out and buy my new car, whatever it is. But what I see very shortly, I kind of chuckle and I wait, because what's coming in this usual cycle, anyone can look at it. You can Google stocks or historical or whatever. I'm waiting for this because this starts coming, next day, half day, within hours. They come back in going, oh my gosh, it's definitely their tone or the emotion is quite a bit lower. Like, they want to, I need to pull out, I need to get my stuff out, or maybe they were late. They had another job and they couldn't get to it for 3 or 4 hours. The next thing you know, they sold out too late or whatever it is. So you have this constant, this wave. I like this despondency that happens in depression, which can be pretty serious. I'm kind of making light of the matter, but this can be really serious. And we have all heard those stories in equities, the stock markets, where it's destroyed lives, like utterly. And unfortunately leads to a lot of bad things, suicide or complete destruction of the entire family unit, kids and house and this and that, and they lose everything. So this is it's gambling. I had this deep discussion with someone yesterday about it. Literally is no different than gambling, and the euphoria that you get through this win, as it's going up and it's going down, and this excitement that people feel like they have a vacuum in their life or whatever's happening, and they want to fill it with something. Okay. And unfortunately it can have drastic, it's not a game at this point. At this point, this is a game the entire time. If you look at the definition of a game, right? The different barriers in here, what are the opponents, and other people are betting on the stocks as well, etc. But it obviously feels like an exciting game over here. But unfortunately, they don't really look at this side of the coin. Okay. And I really want everyone to, if you have not done any type of speculative investment, whether it's Forex, whether it's commodities, whatever it is, you really need to know before you go. Okay. And I have this discussion with my clients or prospects as they come in. And if they're doing it, they obviously have experienced it. Right. Last week I had a pretty serious conversation with someone that they were telling me how much they lost, and they're just done. And that's something that we help clients with here at Equity and Help, obviously, where you don't have to worry about this. It's a steadier return. Okay. And what is your responsibility, not only to yourself, but to your family. Okay. And to others. Okay. All right. Vera. Does Vera ring a bell? Okay, so this is a stock here. Let's talk about this. So formerly known as Turing Pharmaceuticals before it was delisted by NASDAQ. Okay. So it was run by hedge fund veteran Martin, I'm probably going to pronounce this wrong, Shkreli. That's how I'm going to say it. All right. So federal prosecutors are alleging that Shkreli illegally took stocks from Retrofin, the NASDAQ short there, a publicly traded biotech company that he started in 2011, and used it to pay off both personal loans as well as the debts from his now defunct hedge fund. So we've heard these horror stories from these hedge fund managers that are, Ponzi schemes or just whatever they're doing legally, whether it's a full-on Ponzi scheme or they're just stripping so much of the money from the fund itself. And so these are things that you have to, unfortunately, there's a lot of regulations in these hedge funds and the stocks, and because it actually is there's so much going on and so much paper trail, so much digital stuff happening and whatever trades here and back and forth. It's easy to throw in little vacuums. I don't know what the technical term in that area is called, but whatever they employ in there, and they're just stripping money out of that. Okay. And these are the other things you have to worry about. Not only just the bell curve or whatever you want to call that of the stocks that naturally occur, but also out ethics. Okay. These are things that you actually need to, your responsibility also plays a part in that. Okay. So So after the lawsuit, Shkreli moved on to new adventures, endeavors, etc., by hiking the price of Darafrim up 5,000%. So just like any criminals, they have a tendency to be criminals. So they're going to move from one thing to the next. And if you happen to be the target of plan number B or C or D, whatever Shkreli is going to, you don't know. You don't really look at his history or look at the other things he's been doing. And but you need to, for sure. So why is it important? All right, impact investing, social responsible investing. Why is it important that you invest in and you help better society? Okay, what is your responsibility in that? Okay. So the corporate social responsibility that they have in the area of sustainability, ethics, different markets, very, very long-term relationship built, okay? Their goals, resources, etc. What are these different factors? All right, so let's talk about this herd investing. So what is this? I had another conversation a few days ago with somebody that this is exactly how it goes. All right, so what is herd investing? All right. Warren Buffett wisdom: be fearful when others are greedy and be greedy when others are fearful. Okay. I'm going to show some different graphs here in just a moment. We'll talk about this. So the herd instinct was a prime factor in 2001 tech wreck, the 1929 stock market crash, and the Mexican currency crisis of 82, 84. Okay, so what is this herd investing? Okay. Too casual research, relying on companies' reputation alone prior to investing can lead to regretful investments like Turing, like Vira that we're talking about, pharmaceuticals. So this mentality can also lead to a less diverse portfolio. So if you're the early enough, so what would I say here? I want to say that Warren Buffett makes lots and lots of money because everyone's going to follow him. Now, what if someone's not paying attention? Oh, here's a recent example of Elon Musk. Okay. Invests, millions, hundreds of millions, billions of dollars in a stock. Okay. It was going nowhere. No, it was just kind of just nominally producing. But all of a sudden, whenever he invests in it, whenever that stock is low, that immediately is going to raise the price in that stock some. And everyone else midway sees Elon Musk and they start tweeting about it. Oh my gosh, did you see? He must know something. He must this, he must that. And everyone else starts buying in at that point. And it's going to start increasing even more, of course. And he can sell at that point and make money on every single person that invested at this point. So this herd mentality, right? And what's going to happen at that point when he pulls out? Okay, obviously the stock is going to decline, not crash, but it's definitely going to decline. So there's certain people, Buffett or these huge hedge fund managers or whatever, they're obviously going to be buying quite a bit early. Early adopters in anything are the guys that are going to be making, it's higher risk, but they're going to be making that huge returns. But they have so much capital, they're not taking wins on everything. I guarantee you. If you study Warren Buffett or study Templeton or any of these other guys, they're going to take losses, but it's a simple math problem, right? If they take such a huge gain in one out of 5 investments, the other 4 lost, then they're going to be making money. And it's just simply how they're going to be doing this. But you as an individual with not as much capital are going to be investing in one. And it's a similar thing to individuals that come into Equity and Help. Our minimum investment's 3 properties. That's what we produce our results on. If they're coming in with 1 property, unfortunately, they can be that one guy that's sometimes it's not going to produce as well, because even if the family's late 30 days, they don't get a distribution that month. 0 income, even if the family's going to be catching up on it or whatever. But if you have 3 houses, it's our own internal diversification system. All right. But anyways, so back to this herd investing. Your responsibility is, again, in the stocks and these different areas, you have to study the companies, study hugely. I cannot overemphasize how much work it is there's so many factors involved. You don't know who's running the company. You don't know what their internal policies are, or maybe you just don't want to dive that much into it. I don't want to pay attention to the weekly corporate, the chair minutes and find out where the company is heading. And now they're not investing in socially good. Now they're doing defense spending. You know, are you going to be paying attention to that or whatever? So there's a huge amount of work involved with that. All right. Fear-based investing. It's not good for you, of course. You know, a key goal, no matter what you're trying to achieve in life, you want to be happy. Happiness. Okay. You want, whether it's the guy on the street, homeless guy on the street, the guy in the penthouse making millions of dollars a year, no matter where you're at, everyone wants to be happy. Okay. The criminal wants to be happy. Okay. The dad, the mom, the kids, everyone's going to achieve this. So no matter how you do. So if you're constantly in fear, okay, it makes you just enough money in that, but you're constantly in fear. You're like just always worried. You're going to evaluate for yourself. Is that something that I want to be doing? Okay. And the fact is that the market lacks intent. Okay. It's neither orderly nor predictable. It just happens. Okay. To say you believe in the market is like a sailor saying he believes in the ocean. Would you hire such a person to captain your ship? That's a quote from Jonathan Weritz, behavioral neurologist. Okay, fine. Getting spooked by the fluctuating market is a way to get caught in the idea that you must buy or sell according to the ticker. Okay, so you're a follower. Okay, you're following everyone else what's going on as opposed to you're not at cause. And that's a key thing. You're not at cause on what you're doing in your investment. Like an IRA, clients that come in with us, huge amount of them happening right now. It's a self-directed IRA. We immediately put them at cause because we're turning their managed IRA into a self-directed. Okay, and that's a huge factor. Am I cause on this? Okay. With the stock market, you are completely not, you're at cause to the degree that you can put money in it or not. That's where it ends. You're going to hope that they do the right thing. Okay. So when stocks suffer large losses for a sustained period of time, investors will sell, of course, ensuring prices falling even lower. And it just starts crashing, you know, like run on the bank. You know, you have the first guy, oh my God, you know, the sky's falling, et cetera. And, you know, and then this lemming, I love the lemming idea. I don't know if you ever studied lemmings, but anyways, one of them starts going, starts hurting, and they all start following and taking off. And before you know it, everyone's going off the cliff, right? And it's just a weird game, you know, something that so many of my clients are so happy that they're not doing anymore. All right. You got to make sure your investments align with your values. Okay. What are your values? You got to figure out what that is. First up, what is important to you in your life? Take a look at your own house. What is important with your own zone of influence, your own house, your kids, your family, or whatever it is you have, what's important to you? I'm not here to direct people what is important to you, but you got to obviously know what that is. That's a kind of a key thing through life. You got to figure out, just had this conversation. I don't have a lot of conversations with people. Just yesterday, talking to them, a lot of people, especially when they're younger, they have no idea what they like. They don't really know who they truly are. Okay. But you have to know what are your values, what's important. And even now, but even later. Okay. And you start designing your life around that, including your investments. Okay. All right. Prior to investing, how often do you think of what you're investing into and why? Convenience spending is real, and people tend to think with investments that will bring them cash flow and not much else. That's just a sad way to do that, because our clients are making great returns while it's going to help families. Okay, we're improving society and all the butterfly effects that happen with that. Okay, you want to look up Google Scholar, the term's called psychological housing instability. There's like 150,000 articles on it. Okay, talk about the comparison about rental instability and like housing, the rental situation, et cetera, as opposed to a solid foundation. The effects it has on divorce rates, kids' education, the kids' lives they're on after, et cetera, et cetera. So it's quite an interesting research if you want to dive into that. Most people's personalities aren't totally money-centric. 56% of survey participants say that the concept of socially responsible investing is appealing. And I think it's more than that myself, because so many of my, of course, everyone's coming into us is already, it's just, I'm probably a little bit biased because everyone's already interested in that. but I personally feel that it's quite a bit higher than that. We know that not all investments are like big pharmaceutical companies. Out of all the investments in the world, why not invest in something that you may be passionate about or brings you fulfillment? There are a few investments that are socially good while giving great returns, like us. Okay, you're here watching this because this is the area that we're in, impact investing, social responsible investing. And we are considered a high return model because we produce a higher than the average US investment vehicle, and it's super low risk. We have it set up. So many clients absolutely love us, and I do zero marketing for clients, and I have more than I can handle at this moment just because of the word of mouth. We're doing so good. The entire team here is doing so good with the portfolios, with the families, with the houses, with the clients, etc., that so much word of mouth is coming in that and capital that we're loving it. So, and we're going to continue to do so. So if you're interested in that, taking your money, using it in an impact investing way, and not you having a job, like being a landlord, that's a job. You've just created yourself, made yourself a landlord, like Mr. Ripper, right? Three's Company. You want your money. A true investor is using their money. The money is the soldiers. Okay. You want your money working for you, not you working for your money, right? Everyone's heard that term, that phrase. But feel free to reach out to me. Okay. Our website, equityhelp.com. We have an info pack. You can go to this /learn-more. And there's a lot of good information on there, some testimonials from families, from clients, the information pack, and my calendar, so you can schedule a call with me. All right, because I absolutely would love to talk with anyone and everyone. That's what I do. Okay, so reach out to me. I want to thank you all for coming to this week's webinar on responsibility in investing. And if you have any questions, feel free to reach out to me because I am always here and always connected up. Thank you very much for coming. Goodbye.